Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the MarketSite, we have Francis Gannon. He is the Co-Chief Investment Officer over at Royce Funds. It is great to have you back at MarketSite. Looking forward to your insight because the obvious question is, has U.S. economic growth peaked? Are we slowing down? I'm sure you're getting these questions all day long.
Well, that's a great question.
Yeah.
And the market is voting with the slowing down camp right now. But I think if you talk to, and we spend a lot of our day speaking with a lot of management teams, I would say most of them are optimistic on the economic prospects for 2019. So I don't think there is a negative or a recessionary period ahead of us at the moment. And I think a lot is getting priced into the market, at least in small caps, quite quickly.
Right. Well, so when, they're still positive on U.S. economic growth, but it seems like the U.S. are on an island of our own. What do they feel globally?
It depends on the company and depends on the sector that they're in. Most of the better small cap companies are global in nature and they think globally. Obviously, they've been affected by tariffs and the thoughts around tariffs. It's kind of getting into the psyche of management teams, even though we don't really know what the outcome is going to be yet. So I think you are going to see pockets of growth outside of the United States, but you have to be very specific.
Well, you think that we're going through a long overdue de-risking period. Tell us more about that. What exactly do you mean? So
at the moment, you're seeing the Russell 2000 peaked on August 31st. Of this year, and we're down about 17% through last night. And that's kind of a normal thing in our space. If we went back and we looked, and since 1997, there's been 22 intra-year corrections within the Russell 2000, and the median decline is about 14%. So not that much different than where we are right now. I view this as being healthy. We were in kind of a different environment going into the peak of the market, and I guess it's best described as the non-earning portion of the Russell 2000 had done extremely well. In fact, year-to-date through the end of August, the non-earning section of the Russell 2000 was up about 23%, and actually if you had earnings, you were only up 12, and the market was up 14. So it's nice to see that switch a little bit going into the end of the year.
It's really interesting because when you were here over the summer, we had that conversation. What was the number? Like 20% of the Russell doesn't earn?
36% of the Russell 2000 has no earnings at the end of the third quarter this year. So it's been a very odd market in that respect, and it's weird that we as fundamental portfolio managers have to actually talk about earnings and cash flow and fundamentals in a market where the market had, for at least through the end of August, been ignoring those fundamentals.
Why do you think they moved up relative to the rest of the market? It just sounds very counterintuitive.
Well, I think what's been happening in small caps has been, I think, is a unique asset class to itself. It's where all of the unintended consequences of what the Federal Reserve did played out, where zero interest rate policies caused companies with no earnings growth to be valued almost in a long discount way. And so I think that is what's shifting in the market right now. We're returning to a more normal environment, higher rates, higher volatility, and to be honest with you, lower returns, which to us is all very healthy.
Right, because markets that we saw in 2017, that's not a normal market. That's an anomaly. You just don't go from the bottom left of the chart to the upper right every single day. It's supposed to go up and down.
It is. And, we didn't see a lot of volatility until this correction in the fourth quarter here. We had not seen a 10% decline in the Russell 2000 in over 2 years. So people were lulled to sleep by the lack of volatility in the market. And to be quite honest with you, this is a good thing. Volatility can be perceived as a good thing. You can also call it opportunity. And we've been able to find great opportunity over the past several weeks.
I would imagine that traders and investors, they're shocked when we see these wild swings, up 300 points in the morning, then down 200, then you close back up 100. I would imagine that makes it a little bit tricky to wrap your head around that.
Look at it as 1% trading days, right? How many of those occur? And on average, it's about 40% of the time. And running into the end of the third quarter, you'd only seen it around 20% of the time. So, in the history of the Russell 2000, you tend to see more volatility. We just haven't seen a lot of it in the past several years, and investors have forgotten about it.
All right, Frank, thank you so much for joining us at MarketSite. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.